Charles Payne, it's been a while since the last time I interviewed you at Wall Street Unplugged. Also been a while since we did segments together on Fox where I really got to know you, saw how much you care about mom and pop investors. Your own show now, doing fantastic. I know how busy you are. Thank you so much for coming on the show again. I really appreciate it, buddy.
Thanks, Frank. I've always enjoyed our conversations, and congratulations to you because you've been at the forefront of this stuff for a long time.
Thanks. Well, I'm going to start right off the bat, okay, because you've been doing this for several decades. Last week, I thought this was really cool, where the president of the United States, President Trump, gave you a shout out on Twitter for the job he did telling people to buy when stocks crashed. I would have to think that's one of the biggest highlights, right? It doesn't get bigger than that, does it?
It really doesn't. You know, he also went out in the Rose Garden and gave me another shout out. So it's pretty good. It's pretty special. And, you know, again, for me, it gets back to the people, Frank. When in the middle of March, when we were in a free fall, and as we started to turn, the first thing I said, March, late February, I said, there are two things. Please. Number one, don't take a big loss. Whatever you do, you're going to sell some stocks, and I think you're going to regret it. It could be a few months from now, a few years from now. That's number one. Then number two, if you have the wherewithal, this market's getting oversold, you should look to buy some stocks because this is a generational opportunity. So, you know, those are the two things I pounded. And on my show, I had a lot of good themes. When after that March 23rd low, every Wall Street expert, and I'm talking every single one that came on my show, and almost everyone I saw in the media said, we've got to retest the lows. You know, that old notion that you got to retest the lows. So as we started to go up, don't buy it. It's a head fake. We must retest the lows like it's written in chisel and stone somewhere. And, you know, I've looked back at past, cataclysmic market crashes, including 2009, and we didn't retest the low. So I don't understand. Sometimes these things become almost mythical and everyone regurgitates and says the same thing. So I was really happy because a lot of people started to buy, and even with my own work, I started to find opportunities. So it's been gratifying, and for the president to notice is pretty cool.
Yeah, it was. And I have to confess, I was one of those guys. So, I mean, we were early. We got out of the market. China closed. China was closed down. We did a great job selling people out before the disaster. And I told them, I said, no one gets it right on the bottom and the top. There's no way you're going to do it. You're lucky if you get one of those calls right. So kind of late to the party. But what did you see? Because, you know, even if you look back, you say you're looking back historically. I know you look at technical analysis as well.
Right.
But what was it? Because I'm going to give you a plug here. And it's not just a plug. It's for your book, Unstoppable Prosperity. This was published in May, guys, last year. Amazing timing. But your chapter 6 is titled Optimism in a World of Inevitable Corrections and Market Crashes. I mean, what was it? Was it more than that? Well, it won't retest the lows. Is it, trillions being printed by the Fed, cheap valuations? I mean, you can get more specific because I know my audience loves to hear that from someone that's brilliant.
I think all of the above, and I'm glad you gave the book Unstoppable Prosperity a plug. And, here's the interesting thing is chapter 6. When I first wrote the book, it was chapter 2. So my publisher was like, are you nuts? What the heck is this in the book for? We don't want to talk about stocks getting hit and corrections. And they didn't even want it in the book. So we compromised on chapter 6. So I think it was all of those things. But, the main thing I looked at was just how much economic momentum we had coming into the year. Just really, I'm talking like this was the year, Frank. This was the year. We had two headwinds last year. We had the housing was so-so, particularly household formation and manufacturing. They really started to show signs late last year that they were turning, and they really started to build momentum. Home ownership in February was really through the roof, and new home permits and new home sales. Same thing with manufacturing, and of course manufacturing has changed, and so when we get these GDP reports and they say, well, business investments are down, there's a construction part of that, the old smokestack factories that we're just really never going to get back to. Those actually peaked 4 decades ago, but IT spending. And I got to tell you, I went to McDonald's the other day and the line was crazy. I almost got out, I almost just didn't stop. But I said, what the heck? I haven't been there in a long time and there weren't that many options. And the line went so fast. I paid, I drove up to the next window and I got my food and it was hot. They didn't build a new McDonald's. They got new software. They got new technology. And that's where all the spending is going. So we had all of this momentum, everything you want. And it's sort of like if you're in a room and you've had the air conditioner on for a couple of hours. You can turn it off and the room is going to still be cool for a while. So I always knew that that was the backdrop, that this sort of momentum, even though we did hit a light switch and we completely shut down the economy, it was artificial. Of course, there's damage that comes out of something like this, particularly since I don't know if we've ever done anything like this before. And I really think a lot of people learn just how important it is that our economy is always moving. Like, to shut it down, you would think, well, we're America, we can handle it, but we couldn't, right? But we still had that momentum sort of lingering there. And then the swiftness of the Federal Reserve acting, the swiftness of Mnuchin getting those paychecks out to small businesses, you got to tip your hat to them. And listen, I was a Powell critic, particularly in 2018. Those 4 rate hikes I thought were nuts, but I do feel like he gave a speech in early January of last year. I want to say January 4th, where to me, he almost had an epiphany. And I talked about this over and over again. And there are a lot of big time Wall Street investors who just never picked up on this. He said wage inflation is not price inflation. So the old Federal Reserve playbook was always when Main Street started doing better, it was time to put up the speed bumps. That was my mind. He finally got it. You don't have to slow down this economy because the average man and woman on Main Street are doing better.
No, I love that. And going back to really quick, I have to mention this, as someone, you've been doing this for decades, when your publisher told you that should be pushed to chapter 6, you should have pushed it to chapter 1, right?
I'll keep that in mind next time.
Always works that way, right? When everyone's against you, you're right. But the innovation part that you talked about, even when you're forced to do something, like it's almost very, very difficult, especially if you're over 60, you're set in your ways. That's just the way it is. Well, I'm going to be like that too. But when you have events like this that force you to do things, because you mentioned the innovation that was taking place behind the scenes, how much do you see companies changing? Because now it's virtual healthcare, right? The doctor's appointments, it's Zoom, Skype, work from home, which could be not permanent where 100%, but you see in commercial real estate, it's probably going to get, hurt here. But you're looking at different innovation. Do we need events like this to happen to where you see that this is going to be permanent, and which ones are permanent and which ones may just be for the time being? Because a lot of change has happened, since COVID-19.
It's really interesting because of where we were in the whole arc of innovation, is that there's nothing surprising except we just took the future and pulled it closer. We took what was supposed to happen over 3 to 5 years and we pulled it in 3 to 5 weeks. Something like a Zoom went public last year. Okay, popped a little bit at the open and just sort of drifted, not exciting at all. It was going to take them several years to build out that business model. Instead, it took them a few weeks. Before you knew it, everybody was having Zoom birthday parties or whatever. Telemedicine, we always knew that this was the future. For a decade now, you've heard not only in economic circles, but also political circles about this so-called work-life balance and the ability for businesses, employers, to allow their workers to customize their hours. And that would include perhaps working from home via the internet. All of these things and all of these business models were already in place. We just didn't think they would mature this quickly. It was like Jack and a beanstalk. We thought we were just going to plant this thing and let it water and grow. But because of the nature of the pandemic and the lockdown nature of the country, it sprouted quickly and went through the roof. Now the good news is that other things, a curbside pickup. Companies had curbside pickup, but it wasn't a big deal. You drive to the mall and you see the parking spaces for curbside pickup. They were never full, but they were there. Omni-channel for retailers. What does that mean? Shop online or during your lunch break. Maybe go in the store and pick it up while you're there, and then so all of these things, almost all of these things were already in place, but we grabbed the future and we pulled it closer. Now, how much of it lingers remains to be seen. There's no doubt in my mind that there's been a massive shift. A lot of people are going to be moving to suburban areas, rural areas. The notion that I can work from home 3 days a week, it would be worth it for me to move out of the city. I'll commute the other 2 days I don't. So there are going to be some changes, I think. Young families, and this is good in my mind because you got young millennial families. The oldest millennials are 40. So you have these millennial families who are now household formation. Do you want to bring up the kids and have to worry about, living in a 40-story building, who touched the elevator keys, the buttons? Mm-hmm. So, I think there are going to be some things that we do different culturally, and I think they'll obviously have an impact on investment opportunities. And commercial real estate remains a question mark. There's no doubt about that. And I just let my lease expire. My lease happened to be up in May. And I grappled with it. Ironically, they played hardball initially, which was really crazy. And then I just decided I'm going to let it expire for now and try to regroup because my business is still doing very well under these circumstances.
Yeah, that's pretty incredible. And we're going to get to that business in a second. But I wanted to stay on this topic to the point where, we gave this shout out with the president and it was amazing calling the bottom. And you've been in this market for a long time. So that it's not about the past, it's about the future, right? That's our clients talking.
Right.
So today the S&P 500 is trading around 23, 24 times forward earnings, highest valuation close to 20 years. That's based on around $100, $125 in earnings for S&P. So we're looking at a 25% expected decline in earnings for 2020, but then a huge rebound in earnings in 2021. Where we are today, are we priced for perfection here, considering, lots of risks out there, not just the coronavirus, but you're looking at China. China was slowing before this. We have a lot of tensions going on right now. You're looking at Europe was almost in a recession, but pre-coronavirus. We're going to see, the Disney parks, probably 85% is going to be the new 100%, right? Just you're going to see less people going out there, especially elders. But are we priced for perfection, or is it just, hey, there's always going to be ideas and rotation like we're seeing today?
I think the rotation story is sort of mitigating that. We talked about the Zooms and the COVID/lockdowns and ideas and those stocks taking off in a way, a parabolic way to the upside. And then subcategories of semiconductors doing extraordinarily well. One of the first real big, strong segments of the market to come back, roaring back early on. I don't want to say we're necessarily priced for perfection, but I think we are priced so that we don't have another lockdown. I think the market, and this is what I was saying for a long time, when the narrative in the financial media was that the market's up on hopes of a vaccine, I didn't see that. I thought that the market was up because the market figured that we would learn how to coexist with COVID-19, get back to work, and find ways to prosper. I know, and I'm not a big fan necessarily of traditional valuations like PE ratios and things like that. I think that as the economy comes on and you have the bond yields go up, that 10-year gets over 1%, I think you'll see a fair amount of money start to come out of the bond market and find its way into the equity market. You've got $4.7 trillion sitting in money markets right now. So I think money is going to gravitate to the market, continue to gravitate to the market. I'm not saying it's one of those so-called Tina situations, where it's the only game in town, because in the last 6 weeks, and really for a long time, every single week, big money, billions of dollars have come out of equity, mutual funds and ETFs and gone into bonds. So it's not that it is the only game in town, but I do think there's going to be a rotational shift that you alluded to. So from a macro level, I think there'll be plenty of money to come into this market. And then within the market itself, I think you'll keep seeing this sort of rotation, in part for value, in part to be tethered to a recovering economy. So, these industries that really do well when the economy takes off, they've been the hottest stocks over the last few weeks, over the last month. And I think that will stay there. And of course, we'll have some bumps in the roads. And I like to see the market challenged periodically. That's how you know if the rally is real or not.
Yeah, no, absolutely. And I'm a big believer in the rotation story as well, where we're seeing that go from technology, COVID-19 plays into cyclicals. I didn't see the rotation going into names that file for bankruptcy, like the Chesapeakes and Hertz. I missed that. That's something maybe I have to read over and learn more about. But yeah, that was a little bit crazy. But yeah, that makes a lot of sense. Now, I wanted to change tunes here because this is something that's going on in the world today. Something that we're all talking about. I see you talking about on your show as well, and just dominates the news, which is the protests on racial inequality, where people of all races are coming together for something that's incredible. It's historic. I really believe that. It's sad that we need to see something tragic to happen to bring people together, right, in hopes for change. But we're seeing tons of protests, most of them peaceful. But we're also seeing people who have a different agenda using that platform to incite violence, and of course, that's what we see the most of on TV through social media channels. As someone that's such an influential person, I mean, you've worked so hard to get where you are, military background. How do you view what's going on in the world today?
Net, I think it's an awakening. I think it's been simmering, and I've been thinking something like this was going to happen for well over a decade. And almost every summer over the last 10 years, I thought we would have something. I thought we would explode like this, and to a degree that, obviously there's a lot with the racial component. There's also a lot just with the division between poor and well and rich. In fact, to be honest with you, a lot of that actually drove the election of President Trump, the have versus the have-nots. The so-called deplorables also happen to be those folks that, who had a son who got hooked on opioids. But the genesis of all of this gets back to lack of opportunity. So when you ship 8 million jobs to China and the factory that dad worked at is gone, dad has lost everything. And I have nothing to look forward to. And, we had a good life, that dad had enough money to put me through college. Now we can't pay a mortgage, so those kind of things have been in the Black community for a long time as well. So I think the entire nation has been sort of the simmering with frustration over this, and the elites always getting everything, and even with this saving. Listen, while I tip my hat to the Federal Reserve, let's face facts: the rich are gotten a lot richer from the actions that the Federal Reserve has taken. And I don't know if there's a surgical way to make sure that the rich don't get whatever, but net, I think it's a good thing. There are some nefarious forces out there like the Antifas of the world who have been plotting for this kind of stuff and have really, really, taken advantage. And they're organized, they're well-funded, and they create havoc. It gets back to sort of the anarchism that was always sort of lingering. If you go back to the last wave of immigrants from Europe, the ones from the Southern Europe, Italy and other places, the philosophy of anarchism was one of the things we were worried about as a nation. That's why one of the main reasons why New York City had those new immigrants and other kids pledge allegiance to the flag every single day. This is your new country. So there's always been that element out there, but they're organized and they're well-funded. And I think there's enough anti-Americanism out there in this country and around the world that those kind of folks are always going to get the kind of money they need to perpetuate something that's not real. So what they did, and I don't think really was a reflective or a proxy for the more peaceful aspects of those protests, or the real pain and the idea of solutions. Solutions-oriented people don't want to burn down a local Target. Now, there are going to be, people in those neighborhoods who see an opportunity, particularly young people. And I tell a lot of people, I grew up in New York City at the time of the 1977 blackout. And for those who don't know or remember it, it was one heck of an event. The entire city of New York, the lights went off. And, I went downstairs and I looked at the corner and there was a jewelry store there and everyone was pulling on the gate. And this one guy said, "Hey, everyone get something." And I was like, "Oh man." I ran upstairs and told my mom, and she wouldn't let me go back outside. So, she's like, "No, you can't loot." And I'm like, golly, I'm thinking it's an opportunity, right? I'm watching people, Frank, run up the street with stuff like that, I could never afford. And then there was a boom box that I wanted for 3 years. Frank, I walked by this boom box every day. It was my dream boom box. I wanted it. When I saw a kid run around the corner with my boombox, I just lost it. I'm like, you got to be kidding me. And then there was a Woolworth 2 blocks away. And I don't know why, but the group of people had grabbed a big Timex watch display. It was like 6 feet tall, had dozens and dozens of watches in it. It must have gotten too heavy at this point. So they ended up dropping it right in front of my building. And I think that's why I buy watches to this day. I've got like 25 watches. I can't help it. So, but the point is that, yeah, you know what? There were some local kids and young people, for the most part, who did the looting. It was wrong. For some of them, they justified it in their mind because they feel like, hey, these businesses rip us off every day. You had someone like a Bernie Sanders saying, that these same corporations are looting from you, so it's no big deal. And so that's a reflection of, unfortunately, the anti-capitalism, because in Minneapolis, the very first night of looting, some of the businesses hit were owned by Black people. And I'm talking about people who struggled and saved and scrimped and dreamed and watched it all go down. So that's part of the story that's got to be dealt with. But the much greater, larger part was the mix of people who want to do something to make this country and this world better. I think they're sincere. I think the window of opportunity is open. And I think it will be individual introspection on how there might be little things that I do that I do not even recognize that makes other people feel bad or makes their day harder or whatever it is. Just the ability to say, okay, I'm willing to learn, because I do not trust this thing with politicians. I do not trust it with the media. I think it's got to be truly grassroots, where individuals commit themselves to making this country better and themselves better citizens. Right now, I think we're on the cusp of that. I hope it can keep going.
Yeah, and I really appreciate you sharing that, because it's always a tough topic to talk about. And even from what I see, we're all behind this thing, right? We need to address racial inequality. But I am against things like defunding the police. I'm against violence. It's hard for people to see their business looted. But sometimes even when you say that, even if I mention that on social media, like, man, we got to stop this. You're going to get the craziness. Sure. It's almost like an all or none scenario to them, right? It's if I speak out against part of that, you're labeled as someone who doesn't support the entire cause. And it seems like that's dividing people to the point where, unfortunately, you see more hate than you've seen ever in this country based on what you're watching out there, right? Because that's what everybody wants to show, because I know that gets page views, I guess.
Yeah, the social media aspect of it, the media aspect of it has been dreadful. And to your point, it's not binary. The idea is that you can't be for one or the other. I can believe that Black lives matter, white lives matter, that police matter, that small businesses matter, that we should fund the police and train them better. I can believe all of those things in my heart and know that I'm a good person.
No, that's well said. Okay, so a lot of people know you. They watch your show, Fox, Make Money with Charles Payne. But if I had to guess, few people know that you own your own research firm called Wall Street Strategies. You provide daily commentary, investor education series. You actually provide stock picks through several newsletters, right? We do here. So talk a little bit about that service and the easiest way for investors to find it.
Well, my two flagship services, one is designed for traders, usually buying ideas and holding them no longer than 30 days. And the other one is more buy and hold, which is more of a 3 month to 6 month hold. I will tell you, Frank, I've had to be a little bit more nimble with that. And, I've taken profits on some ideas in the last couple of weeks that I thought I was going to hold for 6 months or a year because of the volatility, which works both ways. Yeah, my biggest thing is I try to educate people. I put a lot of time into my market commentary, and I try to have fun with it. But I also try to endeavor to find things that people are not talking about. Ultimately, my goal is that people just take control of their own investing lives, and look at your portfolio. You own 6 mutual funds, but look at the top 10 or 20 holdings of them all. Let's say you have 5 mutual funds. If you looked at the top 10 holdings of potential 50 different ideas, you'd be lucky if you have 12, 15. They give them different names, but they're all buying the same stuff. And that's why it's hard to beat the market. And so when the market goes up, you're just kind of, making it along in your pants. I want big fees to be average. And when the market goes down, because those stocks usually go down faster, you're actually taking even bigger losses than the broad market, and you're wondering what the heck is going on. And So I've been lucky enough to do that for over 30 years. So it's Wall Street Strategies. My website is wstreet.com. And if anybody wants to give it a free trial, just mention Frank's name. I'll give you a free week for sure.
Awesome. I appreciate that. Okay. Final question here, because my audience loves this. Everybody loves this. Can you share some of your favorite ideas in this market without giving away things that people pay for? And that can include sectors if you don't want to be specific with individual names. But I know people love you because you cover so many stocks and sectors. I was wondering if there's anything out there that you like over the next 30 days or something as a trade or even long term.
I like Sherwin-Williams a lot. I like United Rentals a lot. URI. It's a U.S.-based company. And, you start talking about rebuilding. I absolutely love it. I'm struggling to find cheap stuff right now. So last week I was 100% vested in my flagship service. Now I got 20% in cash. So those are a couple names that just sort of pop out at me. They're not necessarily trading vehicles per se, but I like them for the rest of the year. And I think you got to have exposure to cloud infrastructure, but those names can, of course, be extremely volatile. But that's your next hot sector. The semiconductors, I think Advanced AMD, Advanced Micro. I love NVIDIA, but I just wouldn't ask anyone to chase it up here. I think AMD's got an opportunity, though. And they've had opportunities over the last 30 or 40 years, but they always drop the ball. I feel like management's going to seize on them this time. So those are just some of the names I like.
Nah, it's great stuff. And I'm going to end with this, Charles, because I mentioned earlier where, I know you for a while. We did videos when we were on Fox, and we made sure we stayed on separate couches because we were both wide guys and it didn't look good when we sat next to each other. But, seeing you behind the scenes, there's one thing that always impressed me is that you cared, right, about mom and pop investors. And I saw that back then. I see it with your show. So to see the success you have, your own show, the audience that you have, you're one of the good guys in the business. I'm really, really happy for you. And thanks so much for taking the time to come on Wall Street Unplugged, man.
Thanks, Frank. Very kind words. I appreciate it, man. And I miss you. So call me up more often.
All right. You got it, buddy. Sounds good.